Morning, Peter. Thanks for joining in. Peter, before we jump into bonds and currencies, a quick take on what's going on with crude. This morning, of course, reports are that there is oversupply, and that's what's keeping the pressure on crude prices. Yesterday, of course, the streets from Donald Trump to Iran pretty much went unnoticed.
Well, good morning, Samina. Yeah, when you look at that crude picture, there is no doubt that, as the markets are showing and demonstrating that there is a little bit of oversupply. And that wasn't, I think, anything that really bothered a lot of traders up until the last probably the last few trading sessions. Though the other side, of course, is that, this time of year, refinery outages, and when you're looking at the weather conditions into August, that can greatly impact, from a production side. But I feel as though that it's probably just having a little bit of a breather. There's no doubt the market was probably a little bit overbought, and there's just a sense of some of that hot air or hot steam coming out of the market, and it'll settle down over the next couple of days, I'm sure, but possibly a little bit further weakness over the short term.
Peter, in that case, what do you do with crude prices at the current levels? Is it a buy? Is it a sell? Is it a complete avoid because it's in sort of no trade zone? What is the general outlook? And also for the medium term, which is the next couple of months, what sort of targets do you have for crude prices? Because I still believe the likes of Goldman Sachs continue to remain very bullish on crude prices.
Well, I think they do. I mean, there's no doubting that some of those big players are very, very bullish. But when you're taking on board from a short-term perspective, there's probably further softness. I think the WTI market will edge probably, a couple of bucks lower than what it is at the moment, unless you see something dramatic happen. And who knows what can happen when you've got the likes of the China situation and tariffs and President Trump. So it's very much a day-by-day proposition. Or again, as we mentioned, as far as weather outages and refineries. So I would say probably at the moment that WTI, 63 to say 68 handle. Brent, well, that'll trade naturally higher from that, high 60s to probably 73, 74 is probably the range. If they step out of line with those, either to the upside or the downside, then I think that it could be quite explosive. It's very much a wait and see. Traders, I think, at the moment are very short, and they'll continue to do that over the next, matter of days. Don't go against the trend, Samina.
Right. Peter, how concerned are you about the commentary that came in on the weekend from Argentina? G20 finance ministers not mincing their words, clearly stating that they're concerned about the escalating dispute over global trade. And, of course, I would imagine the decline in emerging market currencies, both those factors put together, is actually going to work against energy demand, right?
Well, yes, they will, but there's no doubting that. But the other side, of course, is from a big picture perspective, you've got the likes of those geopolitical concerns now with Iran and what's going on if there's going to be, as far as sanctions and how aggressive the United States is going to be with Iran. And that could cause some supply disruption. So that needs to be taken into concern. Again, those trade issues. Is President Trump going to up the ante and, move forward and go 100 billion, 200 billion or 500 billion as far as, the tariffs? And it seems to be one-way traffic at the moment, which in turn creates a lot of confusion to central bankers and, of course, to, emerging market economies, as you mentioned from that Argentina meeting. So there's a degree of uncertainty, and that creates volatility. And that's, from a trader's perspective, I suppose that's probably what they do like. Central banks don't like, but certainly traders do like.
Right. Peter, just moving away from crude to what's going on with the U.S. Treasury yields, because that's what lent support to financial stocks on Wall Street last night. U.S. government debt has risen in overnight trade, tracking, of course, a massive move on Japanese rates, right? There were reports late last week that Bank of Japan could adjust its monetary policy. They did try to make it clear that they weren't looking at any form of tightening, but of course, markets preempting and adjusting rates in terms of what they're expecting. What is the outlook in terms of what are you expecting from the Bank of Japan? What's the sort of expectation you have on that front? And more importantly, where do you see the U.S. 10-year head, especially with what's going on across Asia?
Well, also take on board what happened yesterday in China, of course. So that was an interesting point in itself. But, from that Japan market, I think it's just a little bit of a wait and see over this summer period. They may take longer than expected to, really get some traction to the upside. All right, they've soared as far as, their 10-year yield, but you've also got to be a little bit mindful that, you're coming from a very, very, very low base. As far as the US is concerned, their 10-year yield, that seems to be, the 3% number seems to be back on everyone's radar. What happens with Powell and, of course, again, the president and what his views are as far as Fed rate rises, that creates, again, that uncertainty factor, and it seems to be just a repeated mantra, and that creates confusion to a lot of the other central bankers, what the president is actually wanting to achieve or what he wants to suggest, as far as currency devaluations and how the euro's been able to be, a cheaper trading opportunity for them, and, of course, the yuan. So he feels as though that the world's against him in a lot of ways, and that's going to create, again, more confusion to the market moving forward over the next, matter of months.
Right. Peter, good morning. This is Piyush. The question now, we talked about commodities, bonds. What about currencies? This morning, again, when I'm looking at the screen, it's telling me that yuan, again, is almost down 0.3%. And that's, again, a 14-month low versus the dollar. When we're looking at Indonesia rupiah, again, Cambodian. So most of the Asian currencies actually are down anywhere between 0.1 and 0.5% here. So on Indian rupee, what would be your bias? And what's the reason for this persistent weakness in the Asian currencies? And do you foresee much lower levels?
Well, I think from a point of view, Piyush, that, again, what happens as far as President Trump, if you're going to see some continued upside there, where is the market? What's the projections? And that seems to be the great degree of uncertainty as far as Treasury yields, whether we're going to see a move very, very quickly from central bank or the Fed's going to sit on their hands for a little bit longer. And again, that's, a bit of pretty much a wait and see prospect. That, your the rupee US pair, just under 69. There's probably the potential there to be a little bit higher. As far as that US dollar, it's rallied overnight. It's a volatile market at the moment. A lot of those emerging market economies, in the sense of currency pairs, and again, traders are having a field day from the volatility side. I think keep a very close eye on probably some of those Asian crosses. And that seems to be, where we're seeing a lot of action at the moment. As far as the yuan's concerned, well, we're very mindful of, the Chinese. 6.9, I think, was their growth rate for the second quarter, the slowest, or 6.7 since 2016. So there's further softening there, and that was evident by what China did yesterday from a central bank perspective, the PBOC. So it's a little bit of confusion again to the market, or many moving parts, and that's going to create, again, that degree of, interest and volatility from a trading perspective.
Peter, very lastly, talk about the local currency. I mean, every time we think we're topping out on the dollar-rupee pair, there's some negative news somewhere in some part of the world that leads to our currency falling. Lower crude is, of course, supporting the rupee to some extent. But from where we stand right now, do you think 70 in sight anytime soon? And if yes, if that does happen, what is the general perception? Do you think the central bank back home will look to, of course, garner some dollars? Because we managed to sell quite a bit out in the last couple of months on back of supporting the local currency here.
Well, again, what happens, if we see some very decisive action from Fed Chief Powell in the short term, if you see something happen towards the end of next week, but I think over the next couple of weeks you'll see, further announcements. And if we've got an actual date that, the Fed's prepared to raise another, ratchet it up. If that's what their agenda is, then that's going to force, I think more strength to underpin the US dollar, which in turn is going to probably, naturally weaken the rupee and a lot of the other pairs. Is 70 achievable? It may be, Samina, but, at the present time, it seems to be pretty much range-bound, that 68 to 69.5 sort of number. Does it go outside that bandwidth? May do. But again, just from a little bit of pressure, the uncertainty as far as that US dollar and the uncertainty as far as rate rises there. So, again, keep a close eye on it, keep your stops locked in, and, traders are I think, all over that particular trade. They're across a lot of those different currencies, and they're having quite a good time, and certainly a very profitable time at the present.